Welcome back to the channel, guys. My name is Vandell, co-founder of Black Swan Capitalists. So listen, if you guys like this kind of stuff, please subscribe, like, and let me know in the comments if you'd like me to make more of these videos, and I will continue to do so. So the Federal Reserve recently made a significant move by cutting interest rates by 50 basis points. And as I anticipated that they would do this year, they just did. It's 2024 and they just cut rates because they had no option to go around it. This is all they had in their arsenal. This bold action signals their commitment to stimulating the economy by making borrowing more accessible and capital cheaper. Despite experts claiming many rate cuts were actually unlikely, I knew this was inevitable, and the reason is because the government needs to refinance its debt, and they do this every 4 years and cannot afford to do so with current high interest rates. So we've already seen immediate market responses with the S&P hitting new all-time highs, cryptocurrencies, Bitcoin, gold rising, and even gold hitting new all-time highs. Markets are basically reacting to the promise of cheaper capital, signaling more growth and liquidity down the line. Now, lower borrowing costs means that capital will flow back into the market, driving asset prices even higher than what they currently are. With rates remaining high for a while, what many investors were doing is they had their money parked in money market accounts, Fed funds, and even treasuries, ensuring that they get a guaranteed return of 5% plus, up to 6%, something like that. Now, ever since interest rates start coming down, which was just yesterday, investors will start to find riskier assets more attractive, and investors will seek higher returns in other asset classes such as cryptos, stocks, gold, real estate, and other similar assets. With asset prices already elevated and as high as they are, and liquidity increasing, this rate is really good for investors that are in the market and that own assets, and will be good for the long run if you own assets and you're in the market. There's also about $6 trillion, a little over $6 trillion currently sitting in money market funds. And as yields decrease, this capital is likely to rotate back into stocks, cryptocurrencies, and other assets that have better returns, providing additional market momentum. It's just going to come in and move the markets even further than what they currently are doing. Now, as asset prices rise, more money will flow into them because typically retail investors and the masses like to jump in when they see everything already moving. That's when they have confidence. They typically don't have confidence when the market is down or when the market's in an accumulation phase. So all this extra money that's going to come into the markets will create a ripple effect and push asset prices even higher. And personally, I believe that over the next 10 to 15 months, we'll likely see new all-time highs before the market faces another crash or some sort of black swan event, and the dollar will continue to lose buying power as they continue to lower interest rates and create more money out of thin air. So we're basically heading back into a period of quantitative easing, also known as QE. It's just creating more money, issuing more debt, printing more money, and this will further boost stocks, gold, cryptocurrencies, and other assets that are denominated in US dollars. This rate cut is interesting because it aligns perfectly with the anticipated crypto bull run that we've been talking about for a while, which occurs every 4 years. It's no coincidence that the Fed's 50 basis point cut, the 4-year Bitcoin halving, the 4-year election cycle, and the 4-year debt refinance cycle all line up perfectly. This pattern is clearly by design. It's extremely obvious and arguably by design. I mean, there's no way this is a coincidence. And the Fed's starting point of 50 basis point cut shows that they're really committed to this economic strategy they have and stimulating the entire economy, because the truth is they had no other option otherwise. The economy would collapse. They were really backed into a corner, and they have this tool called money printing and QE, and they're going to use it, but they have to lower rates first. And the expanding of the global M2 money supply, which has been happening, signals even more liquidity coming into the markets. Governments are printing more money to refinance the debt, injecting liquidity into the system, into the economy, and into the markets, and this will further fuel asset prices even higher. While short-term volatility is totally normal and expected, it's historically normal, especially in the third quarter and latter half of an election year. You typically see a lot of volatility, and historically, the third quarter has been the worst time for financial markets, historically. From an investment standpoint, this is a pivotal move, in my opinion, and a good thing if you own assets or if you're an investor in the right asset classes. And markets are now expecting up to 100 basis point cut by the year end. So we'll see how that plays out. Personally, I'm anticipating much more rate cuts going into 2025. I think this is just the beginning, potentially lowering rates to 4.5%. Now, this will likely further boost stocks, gold, and cryptocurrencies because, again, the markets are driven by liquidity and the global M2 money supply. And looking at the data, the figures, and the charts, I notice that every time the global M2 money supply increases, that happens to be around the Bitcoin crypto bull run. So it's no coincidence that they are 100% connected. It's extremely obvious. All you have to do is look at both charts, compare them side by side. Anybody can do it. Now, for context, the last 3 times the Federal Reserve began cutting rates by 50 basis points was January 2001, September 2007, and March 2020. The markets actually all took a dump, they corrected, but then we entered into a new bull market phase, aided by, of course, quantitative easing and more money printing. Now, as QE returns, where I think the probability for another market surge is extremely high. Everything is based on probability because there are too many uncertainties, too much randomness. You never know exactly the timing of when something's going to happen. But if we understand where we are today and use history as a roadmap and just a guide, then we could get a good sense of where we're going and what to expect. It increases the odds in our favor and increases the odds that we can predict the probability of something happening, but not necessarily when. So I'm expecting lower interest rates. I think they're going to continue to do that in a gradual fashion, and I see the market increasing and rising in assets of many asset classes for the next 10 to 15 months. Now, the key takeaway is that all signs point to the start of the next altcoin season and crypto bull run. The Fed is cutting interest rates, that's number one. The debt refinance cycle is underway, that's every 4 years, stimulated, and money pumps even more when they increase the global M2 money supply and inject more liquidity into the system. So more money printing and QE are on the horizon, and the global M2 money supply is expanding. So also, altcoins and most digital assets are at all-time lows. So all I'm looking at and what I'm seeing is more upside than downside from an investment perspective, especially in the crypto markets. In conclusion, this flood of capital is expected to lift asset prices, with the Fed's actions providing long-term support for stocks, Bitcoin, cryptocurrencies, and other digital assets, and other assets as well, such as gold. Meanwhile, currency debasement will continue eroding real-world purchasing power. So don't forget that. As they continue to lower interest rates and the global M2 money supply increases and they print more money, making its way into the markets and to the economy, your real world buying power of your US dollar is going to buy you less in the real world. So position yourself accordingly for what lies ahead and follow the money. If you guys like this video, like, subscribe, let me know in the comments and I'll try to make more of these. Thank you very much and have a beautiful day.